Henrik Zeberg with us today. I've been talking to Henrik for how many years now, Henrik? Five,
Many
six,
years. I
seven?
think you were one of the first one to invite me in on something, coach.
Uh,
So happy to be
okay,
here. Very happy to be here again.
okay. Glad to put people on the map. I was always looking
Yeah.
for the diamond in the rough, and gosh, your career has really taken off like a mushroom in the last few
Oh, yeah.
years. Congratulations to you, and
Thanks.
you're one of the more interesting technicians that I've talked to over the years. And we're all right, and we're all wrong at times. It's knowing where you're wrong. And
Yeah.
you brought up the whole um, Kondratiev, I believe, wave cycle about spring, summer, fall, winter,
Mm.
and we must be in late summer or fall with what's happening in the markets right now. So welcome to TradeGate Hub again, Henrik. Great to have you.
Thank you. Thank
Okay,
you very
so
much. And
uh,
again, I'll love to be here every time you invite me in.
all right. So why don't we start off with Nasdaq? We're
Yeah.
experiencing a little bit of a pullback. Nasdaq seems to be holding up better than S&P's Dow is weak sister from my eyeballs. And
Mm.
I know that you're still looking for a major advance from here, almost equal to what we saw from October. Looks even bigger from what we had to
Yeah.
October to the recent high. So tell us what's going to drive, besides your charts, what's going to drive this blow off. The Fed has had some negative numbers, but the Fed's still going to accommodate, aren't they?
Sure, but as you know, it's not just about the Fed. I mean, everybody would like to have the this one silver bullet kind of
Yeah,
thinking where you say it's because of what the Fed does, and then the world is fine.
yeah.
It's actually about what the economy does. That's what I how I see with the world and the economy right now, the U.S. economy. Even though we're starting to see some cuts in the economy, let's see some deterioration. We do not see that in the labor market, which there are two main markets: the labor market, the housing market. The housing market is taking a beating because of the interest rates going up as they have, and we've seen that on the housing market. But the labor market has been resilient, and that is actually what is driving things right now. We have an economy that is still growing. We have job numbers, even though we know they could be revised down, that are still very, very high. We have initial claims that are very low at historically low levels. So why would we expect a crash in a situation where the economy is doing well? I
Exactly.
don't. I don't
Okay.
expect that.
Okay.
So this
And
is drive. This is the underlying trend or the underlying foundation for everything.
isn't it interesting that I read from Joseph Yang that the Fed is going to begin to de-emphasize the employment picture because they don't want to have to tighten anymore, and they are saying it's an aberration from immigration. So they're not reliable numbers, and they're de-emphasizing them, and they're going to focus
Uh-huh.
on inflation more. Very curious that at this time they one of their important mandates they're not going to focus on right now.
Right, right. Yeah. Let's see what go. I haven't heard about that, so that's all news to me. So I didn't
Okay,
see that, but I think that would be a major step if that was something they wanted to do.
maybe we'll hear it in today's presser or whatever.
Okay.
He's
I
talking
sorry, I
today.
haven't. I've been looking into the historical building that is burning here in Copenhagen, unfortunately. So
Oh
that was been all
gosh.
over the news here. So yeah,
Yeah.
sorry about yeah,
Did you
but
ever
but
get to
obviously
did you ever trade on that floor?
I didn't trade there because I don't think trading as such has been there for many, many years. It was
Oh, okay.
in 400 years ago the king built it, and then he wanted trading as we had it in the Netherlands back then. But I think real trading, so that is another building like 500 meters from there, 300 meters, something
Okay.
like that. So very close
All right.
by, and not in such an old building, but it's a historical, cultural loss that we're seeing here today, and that's been all over the news here in Denmark. So
Yeah, that yeah.
sorry not for not
So
seeing the other.
much history
Yeah.
and probably so much blood on the floor. What did they used to
Oh
trade?
yeah.
What was the products that they were trading back then? with
Oh my,
Rotterdam.
you're testing my historical knowledge here about, but okay, let's go. What I believe was that there was actually water close to the entrance there, and so they could actually sail the ships right up to it, and then you can unload all the things that you had from the colonies. Also, we also had some
Okay.
colonies back then, and also just from trading. But the actually the king, the Christian the Fourth of Denmark, he wanted to copy what you had in Netherlands, and actually saw that trading was an important thing to get the country to grow. So
Yeah.
we beat the Swedish up and in a war, and he got a barrel of gold. And then he said, okay, I'm going to use that barrel of gold to build something. And then he built, I think, 4 or 5 or 6 of the most iconic buildings here in Copenhagen, which is one of them.
Wow.
This was Børsen, the stock exchange. The other one is the Round Tower, and others that we also have. But that was the king back then, 400 years ago. And the anniversary was this year, 400 years. And
Wow.
they were trying to, make it look nicer, and then they burned it up instead. So
Uh,
yeah,
yeah.
tragic story culturally.
Yeah. I wondered what that 400-year cycle is. So here we are in some type of cycle that you're following,
Right,
and you're
right,
looking for a blow off. So we have NASDAQ up here. You know,
right.
the market has largely ignored the strength in the dollar. So I'm thinking here, if the dollar rally peaks and we begin to see a weaker dollar, that I believe could be jet fuel for the market. What do you think?
Exactly.
Yeah,
I agree 100%. I mean, I agree. And I think, you have sentiment right now at 91, 92 on the dollar. Everybody
yeah,
expects the dollar to go up, go higher. In my picture, I can just show you that. I'll say, hang on for a second here. Let me just see. We're right here. So if we look at that, we're today here on if in the bigger picture here,
yeah,
we still have the trend that went down here from September
right,
of 22 high to this low here in February of 23. Everything we have seen since then is sideways trading. And sideways is actually a consolidation before something before you go again, you continue to the same direction. That means down.
right.
So what I'm seeing here right now is actually, some would call it a head shoulder
Yeah,
pattern. In
yeah,
my world, it's a that we actually have a first bounce here, a B, and then the C wave, which is the first B wave, and then we had the first decline actually into this point. This one is only at wave two, so A, B, C. And right now you have exactly what you had over here,
it's about
expanding
78%
diagonal.
back. Is it about 78% back at 102.70, 106.70?
Yeah,
Um,
exactly. There is this
something like that.
Fibonacci extension, right? Right. It's at the only at the 38.2 here. So it's
Okay.
and actually you need, I take from this bottom because this bottom is an expanded
Irregular.
flat. So that's why this looks like that. Anyway,
Okay.
but so you're not even moving back so much on this major drop we had here. And
Yeah.
as I said, I think the new when we look back in in years time, we will see that it's actually a part of the first wave, and we're just here at the top of the second wave.
Okay.
And right now, sentiment is at 91.
Yeah. A lot of
And if we
company.
zoom in, I mean, we have the exact same kind of setup that we've seen, we saw in what was it, 23. Also, where we had the expanded diagonal like this, and we see then everybody gets bullish, and then it turns right in their faces, so to speak. And that
Okay.
we do that, we see that also at a point. We know that Bitcoin has also, and sorry, and crypto have seen some trouble ever
Yeah.
since of January here because of the dollar actually moving higher. So I think when exactly as you say, jet fuel. If I'm right also here that we're going lower here, and that is on the bigger picture from this decline here, well then absolutely, I support you. That will be very bullish for
A,
risk assets.
a weak dollar belong the world. And a strong dollar
Exactly.
normally is you get corrections in markets. It's pressure. It's a headwind,
Right.
and it really
Right.
hasn't been that much of a headwind, especially for precious metals. Um,
Exactly.
precious
No,
precious
no. And
metals.
also not on crypto. We have to say,
Yeah,
I mean, even though we've
true.
looked over the last couple of days here, but you still have Bitcoin above what is it now, 62 something right to, but we were in 70s when it was at, the dollar was at 104, 105. I did not see that. I did not expect that. I actually did expect earlier this year also that we would, or in 23 or late 23, that we needed to see some of that jet fuel. And that means that the resilience and the strength in what we see in crypto and in this bull market that we have ongoing is very, very strong. And there is nothing in the economy as I see it that tells us that we now have something of that the market should start to crash from here. Nothing. On the contrary, we have now that the dollar seems to be strength to reach what I think at least could be a top, and potentially also the market yields. So if we get those two to start working for us in an environment where people are ready to buy right in, I mean, let's see if Bitcoin gets above the 75,000, I can tell you there will be a lot of buying. Then the dollar starts to decline. I think the FOMO and the blow off top is going to be the most extreme in this last phase of it.
Okay, so blow off top for Bitcoin, Henrik. What's it going to be? Million?
My target is 100. My target is 115,000 to let me see. I can't even just look at this one. Can I sure this one down? I can like that. Yeah. So I got 110 to 115,000 on Bitcoin, and it is actually a part of a larger pattern here. Let me just put this one down here. So I see that this is either, the beginning of a new bull, but it needs to take a long break after the blow up top.
Okay.
But we haven't gotten to the really steep part of it yet. We see that when we get to the RSI here above
Yeah.
70, that is really when we see the steep part. And then people say, yeah, but it's declining here. Yeah, well, but it also did that here into the steep part. So that is just in the semantics. And we don't even have the last of this month. I mean, April could still be a very bullish month, which I actually think it might be. So I think 110 to 115, if we look at it in this chart here, I can actually see in an even crazy world or in a logarithmic
Longer
chart
term?
that we
Yeah.
could reach 250.
Okay.
250. But 110 to 115 is my target.
All right. Thanks for sharing that. You did bring up yields, and we did have that big rally in TLT from last October after the biggest bear market I've witnessed in my career, which tells me the bull market's over in bonds no matter what happens here. But since that
Mm.
time, after we had that big rally and the 10-year peaked at 5 and broke back down to about what, 370, and now we're at
Mm.
4.6. Do you think there's a C wave coming in the 10-year yield that could take yields back down? And will the long end of the market outperform for some reason, like the 20 or 30-year bond?
Let me try to show you how I think when it comes to yields, market yields, and also
Okay.
to the economy, because I mean, things are actually connected here, and we've created a business cycle model, which is based on the conference board's data. And what I'm showing you here is actually just an example of it. So that is one of the leading indicators. And I'm getting back to why you're asking about this, about the yields. That's the way that we have it down here. This is a 2-year, just an example. It could be the 10-year as well. What
Okay.
I'm thinking is that the leading indicators tells us where we're going with the economy. So when they bottom out and start to move up, that's when the economy actually starts to improve. But it doesn't mean that the recession, the green area here as a recession, that's because the coincident indicators follows what the leading indicators does. So we
Right.
see that those drops down and tell us we're going to get a recession. The recession signal gets you when you get it below the red line here. And then you see actually that the coincident, which is the GDP and non-farm payrolls and employment and the likes, are declining into recession. But then we see that they start to lead up to the upside. But what happens with the rates is that it's a lagging indicator. Market yields is lagging in the economy because it's based not on what the Fed does. I mean, that's what people think, but it's actually based on what the market demand for capital is.
The
So
bond
when the economy is
vigilantes. Bond
yes,
vigilantes.
yes,
They're back.
exactly, like, and also people that are just, when the economy is well, you got a job, you get an even better job, and as you know, the next door is also having a good career, or the good job situation. You start to feel confident. You can actually borrow money to build that house you want, or you can borrow some money for your car or whatever it is, and that is actually what brings the market yields up. And that is what, by the end of it, also kills the market, the upturn, because when as market yield starts to go up, then you will see that people are, oh, now it's cost, it's very expensive to
Yeah.
just pay your debt, pay off on your debt. But what I want to get to, in terms of what you're asking me here, is that what we have now is that we have the recession signal in place. And we have seen the leading indicators decline down to this point. And then people say, yeah, but it's starting to move up. And Conference Board has taken off their recession signal. They're going to be wrong. Because what we've seen before here as well is that when they start to move up, but we still see that we get into the recession. So I'm expecting here the coincident indicators here given by, this is an example only, and there are many of them. There are 4 coincident, there are 10 leading, and I can't remember the number of lagging. But I expect these to drop really, strongly, because of what we have seen in the leading indicators, and that has been the strongest decline we have seen in before the you have to compare to the financial crisis.
Okay, go ahead.
24 months of decline in the leading indicators. That is very, very severe, and people forget about that. We still have a market yield inversion. So
Yes.
I'm expecting, when this is starting to play out, that we're going to see, as we've seen here, top, and then a top in the rates as well. Bottom, 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 and I can go on top, bottom, 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 and so on and so forth. So we had a top, we had a top, we had a top. Remember, the volatility here makes it a little difficult to decide where the top is, but
Right.
anyway. But the bottom is what I expect here. So I expect yields to start coming down, because we are so late the cycle now, and the housing market is starting to deteriorate. So the only thing standing right now is labor market. And why the reason we haven't seen that come down yet is because of the extreme number of market openings, market positions that the businesses had out there.
Yeah.
But if you look at the small business index, you actually see that the corporate world, small businesses of US, same everywhere else, is not well. They're not well.
No.
And that is what is going to
Either are the
influence. And by
regional
the end of the day,
banks. Either are the regional banks.
right, correct, correct. So I think we're waiting for that moment. But right now everybody's saying, because the financial world is showing us we're going up, we get a blow off top, which I also forecast, and you know that. But that does not mean that the patient is well. That means that we are actually still going to see the effect of this business cycle play out, but we have a last hurrah until to the top, because of the liquidity effects coming from the DXY, the FOMO, and most importantly, what happened when the inflation started to decline and the Fed kind of declared, okay, now it's all safe, so people start going into the markets again.
Okay.
And Raoul Pal would say also that the liquidity cycle is going up, and he expects that to run higher and to be the one that is dominating. I'm saying the business cycle will dominate the liquidity.
Okay. So we're looking at what has happened in these markets. I'm trying to get a handle on what Larry Williams used to say, and he's the guy that wrote that book, I don't know, 100 years ago, How I Turned 10,000 into a Million. Larry, and he used to say that when gold is going up with the market, it's not a healthy sign. It's saying
Okay.
that the economy has a temperature. And I'm
Okay.
wondering, and they have basically gone up together, gone down
Yeah.
together with some, breaks of correlations, but um, definitely gold has become part of this um, bubble, everything bubble, and it's starting to
I
accelerate.
agree.
Where's your head at on
I agree.
gold?
I mean, I see. I mean, if you look at gold, you have to look at silver, you have to look at
Yeah,
gold miners, you have to look at platinum, you have to look at palladium.
right.
Everybody's agreeing gold is making a breakout. But guess
Yeah,
what? None of the others have made the breakout. So if you look at those 5 and you say one is making a breakout, that's the one that is right. I'm saying maybe it's not.
okay.
And I'm still saying, and I think you're right on this with the bubble kind of thing. It's because people are talking themselves into, we're going to get a crisis, we're going to get inflation, hence we need to invest in gold. That's what they have done. But guess if I'm right on this one here, you're not going to get inflation. You're going to get deflation. So I don't think that people will actually sit on their gold. And I actually also saw something which is kind of a micro driver, I would call, but I saw that there is a record number of people actually selling their gold off to pawn shops. If they do that, that's because they need cash.
Right.
That's because the consumer is not well,
Right.
unfortunately.
Yeah.
And we know and we can see that, and we know that because what the consumer has been in subject to is the extreme rise. And I have a good picture of that. Let me just show you that in the on
That.
the interest payments.
Yeah.
And this is the reality of the consumer.
They're buying
So
groceries with
ordinary
their
person,
cards. Yeah.
sorry,
They're buying groceries with their credit cards.
exactly. They are buying, and you see here interest payments as percentage of disposable income. It's been the fastest rise since the 1950s, and still we got the Fed talking about a soft landing. Now explain to me how we have a soft landing if people are struggling to pay their bills, which is what I think is that we're seeing. And the small businesses are not good. There's no soft landing in that picture in my book. So what I think we're seeing is that we have the financial markets taking off. We have people thinking, oh, we need to buy gold because now inflation is coming. But actually, what is happening is that the economy starts to roll over, and the businesses need to start, cutting jobs because they expanded their capacities into after the corona because they had
Right.
this extreme stimulus, way,
They had a hard time finding
completely.
people too. So therefore, the
Exactly.
reluctance to let them go, that first they'll move them to
Yes.
part-time before they'll
Yeah.
let them go.
Yeah.
So
Yeah,
they're letting
exactly.
them
And that's
go
what you
now.
see.
Okay.
Exactly. So if you see the number of open positions, that is actually coming down. And then you see the next thing that the companies do, we don't need those extra people. Let's take those open positions off. The next thing they will do is they'll say, let's work less. That's what you see. Manufacturing hours worked is also coming down. And the next thing they will do, unfortunately, is to start cutting jobs. So I agree with this that that gold and markets coming out together is that because the economy has a temperature. It's because it was running hot on inflation, and people now bought into that. But I think they're going to get caught on it.
Okay.
And especially if you then look at miners, you look at silver, you look at the palladium, platinum, and so on, and Barrick miners, just one of the gold miners. Look at that. There's nothing of a breakout of that. Let me just show you that because I think, the world's largest miner in the world, if you had a breakout in gold, as everybody talks about, well, then I would guess that the largest miner in the world will also see a breakout. And that is not what we see. Um, Let me see here.
Okay.
So that was the
So that
wrong
was
one. So let me just,
so it might have a little more
um,
upside. There were some that
sorry.
doubled. I mean, there were some that doubled. Fortuna,
Oh, yeah, yeah.
Endeavor. I mean, there were probably big short squeezes, right?
Yeah.
During this minor rally. But Barrick, I
Yeah.
really don't pay attention to, and I think it's a great point since they are the biggest. So,
Yeah, so I just trying to find it. Let me just share one more time here. But they are the biggest and very weekly 44. I think this is the one. Let me see. Okay. Maybe it's the same one. Sometimes this the chart messes up a little, but let's just take a
okay.
look at this. But really, everybody who looks at this needs to tell me where is the breakout of this,
Yeah.
right?
Yeah.
Where is the
And
breakout of
how about
something where we had the
GDX?
top?
GDX didn't
Yeah,
break out.
GDX the same,
Same.
didn't break out.
Wow. What an
Yeah, so
interesting
if you look,
look.
let's see, let's take a look here. I'm following that as well as also because I will become the greatest gold bull when it's due time, but it's not time yet as I see it. And if you look at it, I'm still expecting it. Look at this. This is my drawings here, but where's the breakout of this? What
Yeah.
what is the breakout here? So everybody talking about gold breaking out, but GDX, which in the miners, they do not break out, and you do not see Barrick break out, you do not see silver break out. But it's like becoming a narrative. Yeah, now it's going. I don't think it is.
Okay. So, but here you say the credit event comes later with the bust, and
Yeah.
say the Dixie weakens from here, Henrik. Is 95 viable before to 85 in the Dixie viable before we get this huge rally in the dollar? to 120?
First of all, I'm not. Now we have had a positive correlation between gold and Dixie. So Dixie went up,
Yeah,
gold went up.
right.
I'm not sure, and I think we probably see the same on the down going down. That when the Dixie starts to go down, we'll see also that gold could go down. And I think
No one will
gold is very, very
understand
close
that.
to a bottom.
That's going to catch so many
Nobody will
people
understand that
flat.
because they think it's all about the dollar. It is not. And you can actually just take
Well,
a chart
it
to do
taught
the
me the
correlation
lesson.
between.
Taught me a lesson here. I got out of gold early because I was looking for this
Ah,
dollar rally to
yeah,
106, and
uh-huh,
yields to go up, and they did. But
yeah.
you know what I said? You know, that maybe a potential war in the Middle East is more important than RSI divergences. That's what I
Yeah,
said.
exactly.
Anyway,
Now, so yeah, when you're saying which level could we get down to, I still have a target that could take us all the way down to first I had 90, but I think it may be shaping up. I had a little my nose is telling me here that we could be coming in like something of a descending wedge here, actually, something like
okay.
along the lines of so this was actually going to be the first
For
line, first, second, and I think we're going to have a big decline into, let's say, late
95.
May.
Okay.
Yeah, and
95.
then actually maybe even like this into August. So
Oh,
something like that.
okay.
That's my guess.
Okay.
That's my guess. I think
Okay.
gold is going to have a big decline here.
Okay.
And if we
And
do that, as you
go
said,
ahead.
rocket fuel.
Okay. And you also, so the bottom in the dollar down there is probably going to coincide with the credit event and the end of the melt up.
Yes, exactly. I'm not
September-ish?
sure the credit event I'm not sure the credit event will happen immediately. I mean, I think when we get to that point, that is the
Okay.
moment where we actually start to see that the business cycles and the deterioration due to
Okay.
the interest payments that has been going up so fast,
Right.
killing the consumer, is starting to have its impact on something. And then we're going to have the risk, the black swan coming out. Black swans always comes out in the recession. They don't
Yeah.
cause this recession. They come out because of the recession. So I think the recession, like I said in before, and we'll have the top in the stock market before that. I said earlier, I think it could be May. I don't think it's May any longer. I have to say this, and that's because the labor market has been so strong. I didn't see that, and I didn't see the dollar hanging up here for such a long time. So
Yeah.
I have to say, I have to push, say the markets probably in the U.S. probably top after summer, August, but I don't see it in the summer. That's why. But I think you could see markets like the Nifty could
Yeah, I was
potentially
going to
have
bring
topped at
that
this.
up. You brought
Yeah.
up the point that not all global markets top at the same time. Why would
No.
India be topping ahead of everything else?
I'm not sure that it will be India just alone. I follow India, I follow China, I follow others, and I'm not really sure why it will just be India here. I mean, it's just because of what I see, and I mean
Okay.
the what I see here is that, and you see even with this doesn't look good for the markets, right? You have a
Right.
gap in the market. It may close that gap, but it does not look good, and you have
Yeah.
negative
Look at that.
divergence here on the weekly chart.
Yeah. Ugly.
This is not a good look after you have had such a rally,
Yeah.
and you are actually done with the count. The count is done and we reach the extensions here. So I'm just saying, if this is going to turn out, as I said to the subs here on the Sunday, also, I said if this is going to turn into what we have right now here, actually, this exactly. First, we have a reversal candle on the weekly. Now we can get it on the monthly. Then I would be very, very cautious. But what we normally see, and I can also tell you, actually, you see Denmark. So the Danish index could also be very close to a top. So where I live, so it's not about India. It could be anywhere in the world. What I think we will see again, what we've seen before, is that what we're told here in everywhere is that the good old US will make sure that they pull the rest of the world through the recession, and it'll seem like that for a couple of months, only
Yeah.
to see the US then fall into a recession as well.
Okay.
But we could probably see some rotation going on because of the things we could see with so money coming out of Denmark, coming out of India, coming out of Europe, and then moving into the DAX is also close to a top as I see it, and we could move into the US for a number of weeks, months,
Last man
and then we'll see
standing.
the top.
And
Last man standing.
everyone will be talking
Right.
about the exceptionalism, which they already are. Okay. I
Exactly.
don't know how they're
Exactly.
going to explain that with a big bear move in the dollar, U.S. exceptionalism, but
Exactly.
that's
Yeah.
gonna be interesting. I tell you what, I could talk to you for another 2 hours. But I want to address
Likewise.
something with you because I'm a fan, and I
Yeah,
like and have made friends with most of the people I interviewed over the years. I think it's been 10 years I've been doing this now, and I always back them up. And
you do.
there's something floating out there, and I've backed you up. Even another company, just because you didn't get a call right on gold, they were rude to you. And I maintained our relationship. So um, some people on Twitter are saying that it's eerily familiar that your work echoes what Dave H. Contrarian puts out there on Twitter, who is also a Super Bowl looking for a bust. What do you have to say for that, Eric Henrik? To you know, um, we were talking a little bit before the show. What do you say to people like that, and to Dave himself about that comment?
Sure, I copy his everything he says, and that's what I use. No, I don't. What I do, and you can my subs is I'm on the show every Sunday. They know what I do and how I explain my things and what I go through. I showed them in October of 22. I showed them the FANG chart. I told them this is going to be reversed 100% and more. I've never seen these charts from Dave. He actually blocked me because he thinks I'm copying him. I've just been showing you my charts now. I'm showing you my the business cycle setup that I'm using for understanding what is the foundation for the economy and hence for the markets. I'm showing you the elite weight and the extensions. So let's just think in a world where I actually did copy him. Let's say I took his targets. Did I then sit and use his targets and then do all my charts based on the numbers that he comes up with?
Yeah,
That would be pretty
reverse
pretentious to
engineer,
think.
reverse
Reverse
engineer.
engineering, kind of.
Yeah, okay, yeah,
It's a little pretentious to think that is what I did, right? Maybe the real reason is that I'm actually just doing this based on the methodology that I have, and I explain to my subs. We got quite a lot now, so they will be very familiar with it. And we still in some very curious way get to the same kind of targets, which I think could be fantastic to discuss. And I actually suggested Dave that and said, um, why don't we sit down and discuss how we are getting to the same, because then we can become wiser. I'm always looking for things to become wiser from. I would love to understand the way of not doing it the way I do, but a way where how he does it to get the same targets. Wouldn't that be amazing? Then
yeah.
we could, in the
Actually, it's
future, we could actually
confluence.
calibrate these two.
Yeah,
Yes, we could
it's
calibrate that in the future and use that as an even stronger tool. But he didn't answer that, and he was just blocking me. And everybody's like, "Yeah, Henrik, you're just stealing his targets." I mean, I can show every
no
chart
one
that
owns a
on that I've
forecast.
done since October of 22. I think it's a little ridiculous and a little pretentious, honestly.
Okay, well, I'm glad I gave you a chance to speak your mind. Would you be open if I could get Dave to come on and have you too? Because I'll tell you what, when I have a view and a narrative, and people I respect have the same view based on a different methodology, they're an Elliottician, I do a lot of RSI stuff, it gives me more conviction about the outcome. And actually, I learn from being around traders that are better than me. So
Exactly.
I'd love to have you two
And I
guys.
think
I'd love to have you two guys talk about your methodology and how it's different.
I would love to. I will show everything and how I do it and how I've done it. And again, we got the subs to know that or to tell that this is actually the way I've been talking about this ever since we started out in 2020. 2020, we've been going on for 4 years with the Zeberg report, showing my charts every week on how I do it, what are the targets, and so on and so forth. I haven't looked at Dave since he blocked me, I don't know, 2 years, 3 years ago. And I honestly
That
don't know where
long
he
ago.
stands today. So
Okay. All right.
yeah,
All
I
right.
don't know.
Well,
So I have no idea. I have no
I
idea how he stands today, honestly.
you know what I say? Keep an open mind. It'll keep your account open.
Yeah,
Okay. And I have an open mind and a different view I had on gold before I saw what you had to your looks today, which makes me not want to plunge. I may buy it the pullback for a trade, but interesting levels that I'm going to be paying attention to. Uh, After we peak, what's your best guess for the high in the SPX?
I've said 6,150 is my target. And again, let me just so that it's not just something I'm pulling. I don't know what Dave
You
is
know,
saying these
I have a
days. So I hope.
technical case that measures that much. If you just take the whole move from the top in late 22 to the bottom and then call
Yeah.
4,800 a breakout, that's 1,300 from 48. That gives you 61. You
Is
know,
that his target, you said?
I don't know if it's his target. I think he raised it to 7.
Okay, I think seven would be a stretch. And let's say then he's probably, if he gets seven, then he's well, fantastic. That would be good.
Yeah,
I don't get seven with what I look at now. I actually think we're starting to see deterioration that will slowly, like the cuts of the death of the thousand cuts is
yeah,
what we're starting to see. And I don't think we get to seven. I think we get to 6,150. And the way I base it on this one, not to go into a lot of details, is by the length of what I have down here. And
right.
then the
Wave one.
Fibonacci extension, as you can see, 6,150 is right up there, is right where we also have Elliott wave tells us, trend line through the second wave and the fourth wave, taken from the third wave, gives you where the fifth wave should
Return line.
be touching upon. And that at that
Beautiful
point, you're at
picture.
6,150, which could be into, let's say, August. That is how I do it. I can do the
Okay.
same for
Let
all
me
other
let me
charts. I
ask
have it
you
for IWM.
let me ask you a question. And
Yep,
this, as time goes on and you continue to put energy into this and you do your research, you can't be lazy to do this. Don't you notice how much better you are today than when we first started talking?
absolutely. And I recognize that, and I can tell you, I want to learn all the time,
Yeah.
and I think I was too focused on certain things. My methodology was in its beginning, and then I
Yeah.
build it out. The business cycle part that I've been upon it, the whole foundation of it now is so strong, it's so powerful. And I actually, that's why I'm saying, I could with such confidence say that we were absolutely not in a going to the crash. I can actually show you I don't know how much time we have, but that was so clear in October of 22 because the leading indicators have not even dropped below the recession line yet. So it
Right.
was so clear to me, and that was why I was so confident on that call. So yes, I can see definitely, and I will hope that in 5 years' time I will be even better, and I spend hours and hours in front of the charts, and I hope I can be better, all the
Okay.
time, and I want to learn, and let's sit together with Dave and
Yeah.
talk to him as well, and see
We'll
how
do
the
that.
methodologies can work out together.
And that's a message to our viewers too, Henrik, that you be patient with yourself, just like you're patient with the market, that you will continue to evolve and mature. And sometimes you have to live through adversity and that it's hard work. And that's a secret. It's hard work and living through adversity. That's the secret of trading. So,
Correct.
what a great,
Absolutely.
another great conversation, Henrik. Really appreciate hanging out with
Thank you
you.
so
And
much for having me on again, and
yeah, and your giving spirit of sharing your hard work with us. That too, I'm very appreciative of. So everyone, follow
thank you.
Henrik. You want to show your website where people could find you?
Yeah, so they can, first of all, they can go to at Henrik Zeberg. Let's put that
Yeah.
up first, and the website can it's actually being updated. So, and to find the right one
Okay.
here, so I
All
probably
right.
will mess it a little
So
up. So
just
but
use
go to my
Henrik's,
my Twitter link.
yeah, at Henrik Zeberg. Okay, and that's where you find him.
Yes.
It's also will be on the copy of the video because I don't know about you guys. I'll watch it again. And thank you so much, Henrik. I have some great narratives to work with for the rest of the year. Thank you, buddy.
Good. Thanks.
Henrik
Thank you.
Zeberg, everybody, my trading warrior brother. Adios. Thanks again. It was fun.